Our next US stock is Twtr. So the rival of Facebook, but it's growing much slower. Sales growth in the first quarter is just 3%, down from 11% in the fourth quarter and 18% a year ago. And when we look at the advertising, it's at 0%. So it's been quite a slowdown, and we are going to forecast a little bit like 2016 into early 2017 that the sales growth is 0 in the next 12 months. So cash flow, and we're excluding the working capital. The cash flow turned positive in 2019 thanks to the faster sales growth at that time. It's still positive 537 million, but with our forecast for sales growth to slow down, we get 292 million of free cash flow. So slight turn down in the free cash flow over the next 12 months. In the balance sheet, by our calculation, it is net debt 674. That's because we've got cash minus the debt, but there is they have marketable securities which would put it into net cash. Anyway, on our calculation, assuming there's a payout every quarter, which is here, so just over 240 million, then the net debt would come up a bit to $635 million, like that. In terms of the profit, I'm going to go back. Obviously, the lower sales growth has an impact on margins. So the cash cost ratio has come down from 45% to 72% in the first quarter. So we're using that 72% and we get a 20% decline in the net profit over the next 12 months. So that free cash flow, which is pretty tiny compared with Facebook, over the next 12 months, using our 1.6% with a 20% discount, gives a target price of $18.6, which is lower. So we're looking for a bit of a tougher environment for Twtr ahead.